All right, everybody, welcome to another session of Market Talks with Dr. Stoxx. This is Dr. Tom Carr of drstoxx.com, drstoxx.com. We've been in business since October of 2002. You can believe it. 22 years putting out market information, teaching people how to make money from the markets, and showing folks what to buy and sell, when to buy it, when to sell it. We also have a sister site, drstoxtrading.com. I also manage an options letter over on marketfi.com. And if you go to our primary site, the drstoxx.com, you'll find an access to our live trading room. This is coming to you from the Dr. Stoxx headquarters in Southwest Florida and the live trading room. We do this almost every afternoon around 2 o'clock. Jump on the live mic, share my screen, and we go over charts together. All right, so with that as intro, let's go ahead and take a look at those two chart setups. First, we'll stick on this one. This is, let me first explain what I have on here. I've got the LRC, linear regression channel, set at 1.5 and 2.0 standard deviation. I have the 34 EMA bands. These are set at high, low, and close, giving us these nice colored bands. Can act as support when price is above, resistance when price is below. I've got the market bias indicator on here, and I did set it at a slightly different periodicity. So it was set normally at 200. I went all the way down to 50. This is a much more responsive. I put on a smoothing factor of 80. That will slow things down a little bit, but essentially this is acting as a kind of a color-coded 50-period moving average. Dark green, strong uptrend, light green, weak uptrend, and then there's also light red and dark red. And I don't use this definitively. I look at the LRC, I look at the moving averages, I look at market bias, I look at MACD, which I have down at the bottom of the chart, to give me an analysis of the trend. We like to trade trends. Generally speaking, we like to get into a trend on pullbacks or on the first breakout of a consolidation, right? We don't want to buy it when stock has been traveling north for 3 weeks and is already overbought. And yet maybe it broke some resistance line from 3 months ago, but I'm not interested in that kind of setup. Those are very low probability setups. Much higher probability is to get in an uptrend at support or get into a breakout potential setup inside of consolidation if you're seeing good bullish signals. All right. I have at the bottom the MACD indicator. Very simply, if it's above the zero line, it is a bullish uptrend. If it's below the zero line, it's a bearish downtrend. You can also look at the crossovers of the fast moving line versus the slow moving line. You can look at histogram for things like bullish and bearish divergence. Various ways of playing with the MACD, but I don't always have MACD on my chart, but I do have it on this one. At the top of that, I've got stochastics set at 14 default periodicity with a 2. Usually it's 3, but I have a 2 smoothing indicator or smoothing factor on there. So that's one typical setup, and one of the ways you can play this is just by looking at convergence of the stock with the MACD. When MACD is high, stochastics is low, as we see right here in this pinch. That's a potential buy. When MACD is low, as it is here, and stochastics is high, just the reverse, that's a potential sell. And you can see the sell signal did pan out within a couple of weeks to the downside, and the buy signal, which we had right about here, did rally higher rather weakly, I have to say, into current recent all-time highs, and now we're starting to see some consolidation or pullback, or maybe the market's a little bit jittery about a number of things. All right, so that's S&P. Here's the thing. Here is the $64,000 question. Are we in a bearish mode or bullish mode? Well, I'm going to give you two answers to that. Those are your two trend lines. We've got the longer term trend line, which we're still well above the support for that. And the shorter term trend line each of which hits 2 points of touch, 2 touch points. The shorter term trend line, however, broke down yesterday, barely, and today is the follow-through day. So when you have a break of support with a follow-through day, especially the very next day, I'll tell you what, friends, that's not bullish. That is bearish. Is it long-term bearish? We don't know yet. Is it short-term bearish? Yes. Are we at the bottom of this pullback? It's been a day, right? It's been a day and a half of pulling back. So we're still very early on. It's possible that that's all that we're going to get on the downside, but not likely. More likely, we're going to get a break of the midline of the LRC. We're going to get a test inside of the 34 bands, maybe down to the green line, possibly all the way to the red. But the most likely scenario is over the next week, maybe 2 weeks, we get a test of the dominant longer-term trend line. And I could extend this out, by the way. There are some lower lows that go all the way back to October that are still in this line. We'll get a test of that, and then we'll get a hold, and then we'll get a couple of days of sideways churn, and the bulls and bears battle it out. The bears think, hey, we've got to take control of the tape and take it lower. The bulls are thinking, buy the dip, buy the dip, buy the dip. That usually plays out over a few days, and then we get the bounce. We're not there yet. We're not even close to being there yet. So we are net short at this point. We do have on, we took some profits off the table earlier in the week, took a lot of profits off last week, and we've got now some bearish exposure. So we're good. We're good to go. We're in the right place, and the market's doing exactly what we thought it would do about this time. Where's it going to go? I just said it's going to probably go, likely going to go down to this supporting trend line. I can't give you a number because I don't know how fast it's going to drop down there, but something under 5,800, and we're at 5,810 right now. In fact, that reminds me, I need to, give me just a moment here. I need to update my, hold on. Yeah, because I'm in the MES short that we have on the micro mini, the S&P 500, and I was thinking that today we wouldn't get so far down, and I was kind of wanting to scale out of my position on the way down, but I'm thinking now it's already showing me the direction that looks a lot stronger than I thought. So I just am lowering my initial first sell. All right. So that's NASDAQ. I'm sorry, that's the S&P 500. The NASDAQ 100, similar kind of story. You're going to find a longer-term supporting trend line that's still in play. Not a problem with that. Don't think there's going to be much of a problem with that. But if you look at, I don't even know where we would put the shorter-term trend line. And in fact, I'm not even going to put a trend line in there because that's not really where support is. Support is right there. Yep. So you can see it broke out a really big green stick, tested that level of support for a few days, rallied up higher, still well below all-time highs, which is, you have to go back to July for that. Came back into that supporting, now support used to be resistance, now support. Held, reversed again. Nice big green sticks, pretty good volume heading up. A little bit of a higher high, but not an all-time high. And now we are working our way back down to this test again. It also coincides with the bottom of the bands, the LRC midline, and I don't have the 50-period moving on here, but it's the 50-period moving average is a little bit lower, but that's where I think we're going, right? Around 20,000 flat for MNQ. Could it go lower than that? Yeah, if it does go lower than that, then we're going to have to get a little bit more bearish than we are right now. But another 100 points for the NASDAQ, we could easily do that tomorrow. A hold of that level taking us through Friday. And then next week, a bounce. Is it going to be a big bounce? I don't think so. Is it going to be a bounce to all-time highs? Not anytime real soon, I don't think. So we still have to maintain our cautious outlook and continue to be open at least to the bearish side of the market. Yeah. It is what it is, folks. It's not I know it would be nice to be bullish all the time. Some people accuse me of being a perma bull, but I tell you what, if you're going to err on either side, err on the side of being bullish, right? Think being bullish more often than being bearish, because bearish turns in the market tend to be very fast, very quick, painful, yes, but they tend to go away pretty quickly. And bullish periods in the market last much longer, even though they're kind of slow and sluggish. Small cap index, it has had actually a pretty good pullback already. We're in our fifth day on the small caps of coming back in. A longer term view on small caps, in my opinion, are bullish, but this is leading the way lower. Big red stick today, big red stick on Monday. It's been an ugly week for small caps, and that means that investors, traders are not real happy with taking on risk right now, right? Small caps, many of these guys don't even have earnings. They are reliant on lower rates. That's one of the reasons why they're falling so hard faster than the rest of the market, because they just can't get cheap capital to keep their business afloat. Now, here we are at the bottom of the 34 EMA bands. That's typically like right here where you do get a hold and a bounce. I'm not holding my breath. Let's take a look at some trend lines. That is your trend support line, and that looks to me like that's in the sights, right? That's probably where we're heading over the next 2, 3, 4 days. So just like it did as it came down into the same trend line, probably going to go sideways for 3 or 4 days, and then we get the bounce move. That's what I think is going to happen. When does that happen? Well, probably not until around middle of next week. We've got some really big earnings coming out next week. We're going to hear from several of the big MAG or FANG stocks. Those will move the market. I expect that they'll be pretty good. They'll probably beat top and bottom lines. It's really all about the look ahead to quarter 4. All right, so those are the major indexes. Let's take a look at 10-year yield. I do think that we have potential here of a top, and I say that from a technical perspective. There is your resistance trend line on the top of this downtrend. These are the yields now. So keep in mind, bonds themselves have been in a downtrend for years, absolute years. And you know what the reason for that is, and I'm going to go out on a limb here. Usually bonds have trouble with rising rates, a higher dollar, a hawkish Fed, geopolitical tension, inflation, right? Any one of those or a combination thereof tends to put pressure on bonds. Bonds also do well when there is a recession on or about to go into a recession, when labor market is soft, when the Fed is dovish. Those are the kind of reasons for bonds to go up. But right now they've been in a long-term downtrend. What we're seeing this last few weeks with bonds crashing, I'll show you TLT, with bonds crashing, there's the crash, and with yields, like the 10-year yield spiking, what we're seeing here is the two things, I think. The rise in the dollar, and I'm not exactly sure why the dollar is being pumped up so high, but it is. Number two, I think government spending. If you look at government spending and a chart of the bonds, you're going to see that they are inversely correlated. So as government spending goes up, the price of bonds goes down. Of course, that means the yields go up, and that's kind of where we're at. So government spending, of course, we've been in a deficit for ages and ages. There are some people really concerned about that. Most economists are just kind of slightly concerned about that. But here's the thing that I think is flashing the sell signal for bonds. If we were to chart government spending, like on a month-to-month basis, you're going to see, right, slow move, higher, 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 a little more momentum, and then for the last 4 or 5 months, almost a vertical rise in government spending. Why that is, I'll let the economists and the politicians tell us, but I do believe that spike there is what's being priced into bonds. All of that said, we've got a pretty good place here for yields to stop and turn around. If we look at TLT, we're not going to see that kind of support for TLT. There's really not a whole lot of support, although let me show you something that I like to put on this chart. The supply-demand pro indicator will give me levels of parallel price support from which the price of the underlying has bounced sharply. And you're going to see we're at one right now. This is a gray box, so it's not as strong as these green boxes down here, and it may be that we need to get down to 90 on TLT before we get the bottom. But from a risk perspective, this is not a bad place to get on board some bonds. Because if 90 is the bottom, and it probably is, you've got a falling wedge, you're below 2.0 standard deviation of this current 100-day trend. That's an extreme print to the downside. You are at a place of at least minor support, and 90 is not that far away. So you could put your stop loss at like 89. You buy it at 92. You put your stop loss at 89. You've got a fairly low risk, fairly high probability upside trade. So that's one long that I like right now. If you wanted to get in, today would be the day. Gold is rolling over quite sharply out of the blue zone of the uptrending LRC. This is probably just a short-term pullback, but gold is rising. Gold should really crash here because the dollar's just been spiking like crazy, and the Fed now has some reason to at least put the first cut that they did last month to put the rest of the cuts on hold. That would not be good for gold. Yeah, it wouldn't be good for bonds either, frankly. So, but the Fed is a little concerned, just a little concerned that inflation's starting to creep up a little bit, right? We saw the CPI and the PPI prints last week both come in above expectation. Okay, where's the VIX today? Up above 20. All right, that's not where you want to see it, but no surprises there because we've got a pretty healthy fall off in the market today. This is a big green stick on oversold stochastics with the MACD above the zero line. So that's the pinch I'm talking about. When stochastics are low and MACD is high, that is, in the absence of other things, a buy signal. Now, the price here is flashing buy. And that's not what we want to see from the VIX. So this is another reason why I think we are probably due for a little more pullback in the market. Yeah, I know everybody wants to jump out there and buy some dips. Hey, we haven't seen NVIDIA below 140 for a couple of weeks. Hey, we haven't seen Apple below, I don't know what it is now, 230 something. Hey, we haven't seen Tesla close to 200 for a while. Let's jump out there and buy. No, just be patient. Let the market come to you, and it's coming down. Let's let it come down a little further so we don't get stopped out of stuff. And we'll hold on to our hedges as long as the market will allow us to. So VIX, my rule of thumb is below 15, it's an easy market. Throw a dart at the Wall Street Journal and buy whatever it lands on. Between 15 and 20, it's a little more challenging, but there are some very good movements, right? Trending movements that we can latch onto and make some good money. You probably make the best money between 15 and 20 because of the volatility. We need some movement in price. Above 20, things get very difficult, right? Very difficult. There's not a whole lot of anything out there that is trending well, and yeah. So anyway, that's where we are today. We're at 20.08 cents on the VIX. So we're starting to move back into that place where it's going to be harder and harder to find decent long setups. But speaking of long setups, let's take a look at a few. Sorry, my nose is really itchy. I think I need to shave. This mustache here is making my nose itch. All right, I only got three. I went through indexes, I went through mags, and I went through high beta, and these are the only three bearish setups that I could find. Bitcoin is a clear bearish setup, right? You've got the market bias in red. You've got the LRC downtrending. You've got the overbought stochastics that have flipped to the downside and have fallen through the 80 line. So that's a bearish signal. You can play this with BITI. Take a quick look at this. This is your bullish fund for Bitcoin, and you can see it's moving up out of the pink zone. Oversold stochastics, deep lows on MACD. That's not necessarily bullish. You don't have the green up here either, so it's not a perfect setup. But the BITO is a pretty good bearish setup. Microsoft is flashing bearish today. I say this in the room a lot. Be aware of big green sticks. Yesterday was a big green stick. It did try to break out of this consolidation, and it's a pretty good-looking consolidation, right? You've got a sequence of higher lows. You've got a sequence of lower highs. Tried to break out yesterday, opened above with the rest of the market opening lower this morning off the bell. Microsoft had gapped up, and then it was trending down like everything else. And now we're right back into that consolidation period and pretty close to the middle of it. We've got overbought stochastics, way overbought stochastics, and everything else is downtrending. So there is your bearish signal. Would I short Microsoft? No, for two reasons. One, your target is not very far away. You know, it's 423. It might get to 417, 418, something like that. It's hardly worth it. And yesterday was a bearish market day for the most part. Microsoft was very strong. That's outperformance, and that usually carries over. It just may take a little bit of time. So I have it on my chart only. I mean, I have it on my red list only because there was nothing else to show you. Coin, however, is a bearish chart. Downtrending LRC, downtrending market bias, up into the blue zone, and it has rolled over today quite sharply. Now, there's been a lot of bullish accumulation of shares, so this probably won't get that far either. It's not a perfect setup, but it's certainly not a buy, not yet. Now, let's take a look at some of the greens. So our biggest one, of course, is VIX. We looked at that one already. Energy, you're not going to find a perfect setup here anywhere. What I was looking for here was the MACD above the 0 line and the stochastics at or below the 20 line, that pinch that I'm talking about, which is a bullish signal. But then you have to look at other things in the chart, and there's really not much here. Market bias is bearish. The LRC is slightly downtrending. We are in the 34 bands, which are rising, and that's not a bad place to be. So there's a little bit there, but it's gap down, right? XLE gap down. I don't know why the whole index gapped down so sharply the other day, a few days ago. I have to take a look at that. But anyway, overnight price of oil, I guess. And so let's not even look at that any longer, because I don't recommend that to anybody. Okay, so you've got the pinch here. We are in a market bias uptrend, and it's not flashing the buy signal yet. We need to see a green candle on good volume. We're still in red candle, and the volume's not good. So we have to wait. PLTR, doing a sideways bull flag consolidation, very strong chart. AI play, everybody loves it. I like this setup. We've got the oversold stochastics. We've got the pinch between MACD and stochastics. Market bias is green. Just that today's not the day. Let's give it a couple more days. XPO, down here, a reversal off of the pink zone. We also have a volume support, minor one. Market bias has flipped red to green. Almost oversold stochastics, and at least we're above the 0 line for a MACD. Not a perfect setup, but it is a setup. We need to see HACK give us a reversal bar. We're not there yet. CRM, which will move on NOW when it announces tonight. Not a buy here. It's too much of a binary event, but it is setting up. It is starting to set up for a pullback buy. AMD, market bias is just green. and we've got the pinch between stock and MACD, but it's not stopping yet. It's still falling. TTD, this is also like a PLTR, very similar kind of chart. Strong uptrend, hardly at all any of a pullback. MACD way high, stochastics starting to go below 20. That's good. DOCN, pullback. SHOP, we were looking at this one yesterday thinking it might be a good one to get in with the market being soft, but now we've got this rounded top. That's never good to see. Rounded bottoms, bullish. Rounded tops, not bullish. But deep oversold stochastics, really high MACD, green market bias. A good bullish setup is forming, but it's not today. We need to see a green candle on volume. The cruise ship, the casino play, a little bit of a 4-bar pullback into the top of the bands. Oversold stock. Here's your pinch. Not bad. Green market bias. Meta, Facebook, same thing. It is pulling back. And we are right now in the middle of the bands. Not a bad place to be, but we need to see, we need the market, we need the stock, the chart, to prove to us that it's being bought. Right now, it's only being sold. So, yeah, if you want to buy into weakness when there's blood in the streets, this is a good chart. That's not how I trade. Maybe it's how you trade. It's not how I trade. So you do what you want with it, but it's not there yet. It just has good potential. Pretty much everything here has good potential, but not there yet. Affirm, nice looking uptrend. Market bias is good. MACD is up. Stochastics not quite there yet, but that could happen. But again, it's not proving to a big sell-off on Roku. I would want to see this get down into the pink zone and then do a flip, right? Give us a reversal. ARM, I've got my eyes on this. I've been watching it all week. Yesterday, I came very close to buying a position because it was outperforming the rest of the market on pullback, but we're not there yet. And there are some things in the chart that aren't that great, right? The LRC is downtrending. We're well below the recent pivot highs. I'll tell you what, where does the trend line go? Right there. Okay, so this is a short, just like we shorted Nike. It's the same setup. This is a short if it closes below, let's say it's got to get today about 139.50, and tomorrow if it's below 140, it's a short. Yeah. But if it holds and bounces and reverses, it's a long swing into earnings. Probably not going to happen. All right, guys, that's all I've got for you. Oh, let me show you one more thing. This is the other chart setup that I have. Let me get rid of all this stuff. Let's just put on SPY. Oops. So this is a longer-term uptrend, that one right there. The short-term uptrend has already been broken, as we saw with the futures contract right there. But it is possible this longer-term uptrend, rather, could be the savior, and it has bounced back up above the 21 EMA. So that's a good sign. Can you all see that? Sorry for the dog. So it did hit the midline. Look at that. Hit the midline just above a long, well-established support trend line and has bounced from there. Volume, I have to say, so far pretty low, but as I say often on these big index funds, you often don't see the full volume until you get past the bell, because all the dark pool and off the exchange orders that come through, the big guys, the really big funds that are buying big positions here, that doesn't get added on until after hours, so you never really know. So this is not bad, but again, like I keep saying, you got to show me, the market has to show me that it is reversing. I want to see a candle that looks like that, or a candle that looks like that, or even better, one that looks like that. when I see something like that, the market is telling me, with this increasing volume, the market is telling me that it is ready to rally, and we're not there yet. Not there yet. Look at this. Here's a good contrast, right? So we've got rounded top. That was not quite all-time highs, but a rounded top. Big slam down, equivalent to today. Couple of days of sideways churn, right? That bar right there, thinking, oh, maybe that's it. That's it. That's it. And then we had another leg lower. So have to be very, very careful here. We could go all the way down to the 50-period moving average. Wouldn't be surprised to see that happen. And this dominant trend line, the one that I keep mentioning, has been pierced and recovered. Pierced and recovered. So how strong it is, we'll have to wait and see. All right, guys, I'm going to let you go there. I'm not going to take chart requests today. I'm sorry, but I'm sorry. I keep forgetting to do this. The indicator down at the bottom, this is your rate of change. Rate of change, like MACD, is either above or below the zero line. Above, bullish chart. Below, bearish chart. You can use it to trade crossovers. So if it's crossing from above to below, it's a bearish sell signal or short signal. And when it crosses from below to above, as it did here, it's a bullish buy signal. So that's one way you can use it, but the way I prefer to use it is to look at the divergence, looking for divergence. So here you can see very clearly we have two higher pivot highs relative to this one. That's a very strong one, right? That's a very strong pivot high where it ran into valuations or something going on in the economy, couldn't get any higher, slammed back down, recovered, rallied back up to form another pivot high, slight pullback, rallied back up to form another pivot high, and now we're in pullback mode. Could you have known that that was going to stop there and again over here? In a sense, yes, by looking at this divergence, right? The rate of change indicator, that's what ROC stands for, the rate of change indicator, which is a momentum indicator, how fast the market is going up or down relative to a range of advances or declines, right? So as the market is, or the stock in this case, or the index in this case, if it's picking up speed, the rate of change is climbing higher. If it's starting to slow down relative to that past range, this is set at the 14 periodicity, I'm pretty sure, then you're going to see rate of change start to slow down and print these bearish divergences. That's what's happening here. Bearish divergence in ROC, momentum is waning, people are not excited about the market as much as they were over here, right? Not excited nearly as much over here, and that typically leads to at least a few days of some softness. That's where we're at. All right, guys, I am going to let you go. God bless everybody, and we will see you back in the room in just a few minutes. Bye for now.